wanted to. So if you hear like sirens or anything particularly kooky outside, and I think we actually started broadcasting a little bit into that. So that was a lot of cleverness that did not get broadcast would be my joke there. But again, this is 7 Investing Now. You are watching us here on Inauguration Day, and we appreciate that. We will be done well in time for you to get your popcorn made, for you to get to the inauguration. We're going to do things a little bit differently today. Instead of our normal format, we're going to be taking your health and biotech questions. We got a whole bunch of them from Twitter. We're going to take some of those. And if there's any live, if anyone is watching the show live, we would love to have your questions. But before we do that, we'll start with Max. Why don't you guys give your background a little bit and explain sort of how you're health and biotech experts?
So my background, 2 engineering degrees, one in bioprocess engineering. So that's scaling up fermentation systems in cell culture. So things like making beer, making ethanol, other chemicals you can make with biology, and also biologic drugs, vaccines, antibodies. And then I went to grad school for material science and engineering. Kind of totally different than biology, but I did some work in tissue engineering, so things like cell culture again, growing organs, but I mostly focused on energy storage and electrochemistry.
I keep asking Max to make me a vaccine or even like an ice cream with a vaccine in it, and he won't do it. Manisha, Samy, tell the people who you are.
Sure. So I studied biotechnology at Stanford, just a bachelor, so I don't have 2 degrees like Max here. So I started working in Stanford's stem cell labs when I was in high school. So I worked kind of all throughout my high school years and college years, and I did some work even post-college years doing stem cell research, specifically for acute myeloid leukemia. Worked at Memorial Sloan Kettering Cancer Center, doing cancer research for them for a few years. I did also a few labs in clinical research labs, so ranging from cardiac diseases and whatnot. And no, I do not have an MD, but sometimes I felt like it was kind of scary, the things they let me do, especially in Stanford's ER lab or ER facility. So that's where my biotech expertise comes into play. And here I am.
For those of you just tuning in, we had a little bit of technical difficulties at the top. We missed like the first 45 seconds of the show where I kind of pointed out that this is the only thing you could be watching today. No, we fully acknowledge today is Inauguration Day. It's kind of a busy / scary day for Americans. So we appreciate any of you who are here. I'm, of course, Daniel Brooks Klein. And Manisha, very similar to you working in Stanford's labs when you were in high school, I was a coat check at my temple. So very similar levels of responsibility. Because I will point out, when you're a coat check at a temple, back in, I don't know, this was, I guess, the late 80s, early 90s, every single man wears the same brown London Fog raincoat, and it is really tricky. You lose one tag, you're in trouble. So similar levels of responsibility. With that, we are going to get to your biotech and healthcare questions. These came from Twitter. We will happily take your questions and comments live. Feel free to ask about other stuff. So if you want a quick comment on Netflix earnings, I'd be happy to do that. We're going to play it fast and loose today. But Chooch asks, how do you square investing in genomic biotech within the circle of competence proposition? I know this is the future, and I want to be in this space, but I'm having to just take Max and Manisha's word for it when it comes to these companies. It's way over my head. Hey, that's how I do it. I'm going to go in the order you guys put on the sheet. So, Max, you wanted to comment on this one first.
Yeah, I just like to point out, hey, look, there's no rule that says you have to own everything that's billed as the future, right? So stick to what you know is still really good advice. There's things I don't understand in, like SaaS or cloud computing. I get like the basic level of it, but I don't know what metrics matter for evaluating those companies or businesses. And if I look at 2020, I could sit here and say, wow, I missed out on like 500% gains everywhere you look. But it really doesn't matter. I mean, stick to what you know is still really good advice. You're not going to get burned. You're not going to, follow into traps or things like that. So, you don't have to invest in biotech just because you think it's the future. If you really don't understand it, or you think it's way over your head, you're absolutely allowed to sit on the sidelines.
Okay, I'm going to jump in here. Max is being modest here. Normally, this is not an area I invest in, but I am lucky enough to get to spend a lot of time with Maxx and Manisha, and their background is good. They know this stuff cold. And I've worked with other experts at other places who know it as well, but their ability to evaluate these companies, and any obscure company comes up. We're going to talk about sort of the prevalence of penny stocks in this space a little bit later. 2 penny stocks came up yesterday, and on our Slack, Max immediately got into this long debate with Manisha, and they knew these companies cold. This would be like, look, I'm a retail expert. Like, I had to explain to Max what Macy's was and other things like that. But this would be like if you called me up about like a local store in your town, and all of a sudden I like could do like a breakdown. That's how good these two are. And I buy one or both of their recommendations every month. And of course, to get their recommendations, you have to be a member. Manisha, Samy, your thoughts on this one?
Sure. So, I do want to agree with Max. At the same time, I think biotech is such an esoteric world. And I'm sure it's how I view the SaaS companies of the world, because to me, that's just alien language. And it's like, what are margins? What's a balance sheet? How does this work? So I think part of investing, echoing what Dan was saying, is if you have the right resources that you can trust, you may not be the expert, but just reading up on basic literature so you know what you're buying into, I think that is prudent. So I own some stocks that I don't know very much about, but there are past recommendations of 7 investing advisors, and I'm just trusting in them that they know what they're talking about.
Yeah, and I'll add, if you read Manisha or mine report, we try to explain it in the simplest terms at first, and then we build on it from there. So by the time you get to the end of the report, you should have a pretty good understanding of what we're talking about, or, at least feel marginally confident. But if you still feel it's over your head, then, you don't have to own everything. So that's all. And
this is also one of those spaces where you don't make big bets. I don't think 15% of your portfolio should be any single, biotech startup that's pre-revenue. But if you're making small, and small is relative. For some people, small is $10,000. For some, it's $100. Like, whatever that is for you, it's important to be represented, because Max, not every one of these is going to hit. I think that's even companies that look like they're going to be successful can sometimes get far down the clinical road, and then, oh no, it doesn't work, or it calls your arms to fall off, or who knows what.
Yeah, and there's companies that have a successful phase 3 trial, and then the FDA brings up some tiny little issue, and their stock falls in half. Or sometimes stocks, or a company will have a successful phase 3 clinical trial, they'll get FDA approval, and then it doesn't sell in the market, and then the stock goes, even lower. So it's even things that look like really good bets, or they look like they're de-risked, can still be pretty, they can still fall pretty hard. It can still be volatile. So definitely diversification is key. Don't put, some crazy amount of money in some unproven biotech for sure.
We're going to talk more about chasing winners, which is a terrible idea, in a little bit. You're watching 7 Investing Now. This is, of course, an interactive show. We know this is a tough area to ask sort of off-the-cuff questions, but feel free in the chat to say hello. Feel free to ask questions. Wherever you're watching this, in theory, you can comment. And you know where you can watch this now? You can watch it at 7investing.com. If you go to the live stream tab, we are now streaming the shows and archiving the shows on our own website. That is a part of a major redesign that we will talk a little bit about later. So Rob Aurora asks, what do you think about Proteomics, and how do you evaluate the potential of such tech versus lofty evaluations and risk reward? How do you value such companies? Max, did I say that right? And again, I'm going in the order you guys are in the sheet. I'm not slighting Manisha here. Is it Proteomics?
Manish and I both immediately started laughing. So he was asking about proteomics, Dan. Of course,
sure it is.
Well, you've been texting me about it all week. So I just put it there first in the sheet. You can ask Manisha first. It doesn't really matter. So proteomics is the study of how protein systems, multiple types of proteins, affect biologic function, right? It's one of the omics. We hear a lot about genomics. That's only one of the omics. There's proteomics. There's transcriptomics. There's all kinds of different omics, right? Metabolomics, lipidomics.
Epigenomics.
What is it?
Epigenomics.
Epigenomics. Yeah, there's a million of them, right? So
you're just making up words here.
No. So proteomics is something that's very interesting, very powerful. I'm not aware of any pure play proteomics companies that are investable opportunities. I know there's some that dabble in it maybe for their tech platforms. but it's something that has a lot of potential, mostly unproven as far as like commercial potential, but it's an area that I'm watching. I don't know what the rest of that question was because we were too busy laughing at Dan.
It's really, how do you value companies when they're in, pre-revenue stages? I know that you got to look at the pipeline, you've got to look at sort of the prospects, and you have to make some guesses. It's not as cut and dry as say, okay, Kohl's is opening 10 new stores. There's a lot more risk involved with some of these companies.
Yeah. So one of the first cuts I like to do is, before even looking at an individual company, it's, okay, what's the big picture? Where do I see biology going, or how we treat healthcare? So getting that lay of the land is kind of helpful in framing kind of where different companies fall within that trajectory. In terms of is it a diagnostic company? Is it a therapeutic company? I will say that I tend to invest in a lot of pre-revenue companies, but I base it on the technology and the platform technology that they found their business on. So, for example, one of my picks is based on gene editing. And so I'm thinking about, okay, well, what is the market opportunity for gene editing? And then I look at that therapeutics company's pipeline. Is this a big market opportunity? What's the potential? And really, you're investing in their potential, because obviously they don't really have anything yet. They don't have a fully working product. There's no commercial drug, but you're betting on the potential and investing in that story. So looking at the people management culture, do they have the right DNA to even run this business? Looking at their product leadership, looking at their IP. So there's just a number of different factors that you have to invest in, knowing that they don't actually have a product yet.
So how key is management? Max, I'll let you answer this one, because I look at right now, so I'm a big T-Mobile fan, and John Legere, who turned that company around, has left the company to move on to other things, and I don't care where he goes. He could take over the company. He could take over Papa John's, and I would buy shares. That is how much I believe in him. Max, does it work that way? Do you look at sort of the track record of if they've done it before, if they've been instrumental in other companies?
Yeah, so management is always important anytime you want to own a business. In these technical areas, it's important, and at the same time, it's less important perhaps, because there's only so much you can do to overcome science or technical obstacles. So management's always important, but it's tough. You have to also weigh it against what is the company trying to do, and sometimes it just doesn't work. Manisha might have some different. She might feel more bullish on how management is important here.
Manisha, any last words on this one?
No last words, but basically, if the management team is extremely strong, there's a likelihood that they'll continue doing good things. And sometimes you can have a weak management system, and you see those companies don't tend to do so well. So I feel very strongly about management. That's
true, actually. Yeah, if you have a good management and maybe the first initial focus doesn't work, that good management team can figure out a way to turn the thing around. So that it does matter in that instance. So that's a good point.
And good management doesn't mean you're going to succeed on everything. Bill Belichick did not do so well, and in his first head coaching job doesn't mean he's not the greatest coach of all time. And yes, that was a dig at Max, who stuck with Mike Tomlin, the unfireable coach in Pittsburgh.
Why?
Every year, it's all his assistants. Get rid of them all. Lamper 2 asks us a question. I want to field this one. I'm going to let you guys weigh in. Will one vaccine company become totally dominant, or will they all do well? It doesn't matter if one becomes dominant. They won't, because we need a lot of vaccines. So any viable vaccines are going to be handed out. And vaccines are being sold at cost or at a loss. That is not a great business. Vaccines might raise your profile as a smaller company. We all know who Moderna is now. I guess that's something. But these are not businesses. Do not chase COVID-19 vaccine stocks. It is a terrible idea. Manisha, you're nodding your head. Feel free to disagree or weigh in here.
Oh, I can't agree with you any more than I already do. It's been really painful for me to see how stocks have either risen or dropped due to, the smallest inkling of, oh, they have a vaccine that they're working on, so the stock rises 30%, or oh, it didn't work, so then it drops 50%. I'm thinking that's not their business. And also the margins on a vaccine business, it's next to nothing. I'm sure, as you mentioned, it raises the profile of the company so people are aware of the company a bit more, but they're not really making revenue off of a vaccine. It's more of a validation that they're capable of doing, or in a pandemic, they can have something up and ready, and gives you greater confidence in the management and whatnot. But you should be investing in the rest of their pipeline, not the vaccine itself.
It also makes you feel really good about humanity, because like when you look at these companies, they spent a lot of money chasing something that might not work for the good of humanity. And I know some of them took government money, but some didn't. A lot of them just said, okay, we have the resources, we can probably do this, let's do it. Now, in the case of the Moderna vaccine, I believe that becomes a platform for other things, Max, that they could, in theory, take that in other directions.
Yeah, so I looked into this like a couple of weeks ago, because I've been following Moderna since it was a startup. So like if you're investing in Moderna because it has a coronavirus vaccine, that's not a good idea. But they do have a very enormously stacked pipeline, and they did just collect a lot of government money. So for instance, BioNTech and Pfizer they're not part of Operation Warp Speed. They just developed it because Pfizer has a giant balance sheet. But for Moderna, they could potentially use some of that government money to, fund development elsewhere in their pipeline. At the same time, I imagine most of their scientists are probably busy working on the vaccine and everything that goes along with that. So they had to kind of pause research in other areas. So I don't know. It's still like, I don't know what the valuation is today, but it was at like 60 something billion recently. That's ridiculous. Even 30, 20 billion. That's up there with like companies that have really successful drugs on the market. And this company has nothing but a coronavirus vaccine that's probably going to be sold, I think it's $15 per shot. And how much of that is eaten away by the costs and the manufacturing. So, good to give it an extra look elsewhere, like Manisha said, but don't chase things just because it's a pandemic play. That's a really terrible idea.
And that question came from Lamper2, who was watching the show live. We really appreciate that. We really appreciate your live questions. And sometimes, we hate having to go, oh, no, don't do that. But that's why we're here. We want to be a voice of reason, and sort of, when you go, oh, this seems like a good idea, you can ask us. We're all accessible. We can't give you individual investing advice, but if you say, wow, hey, here's this thing, I think it's going to do this, here's my reason, we might be able to say, ooh, no, there's a reason. And that's kind of what we just did with investing in COVID stocks. But we're going to take our next question from Mabel. This is at Teach Me to Invest, a fan of the program. We're a fan of hers. Whenever I think about biotech penny stocks come to mind, which I avoid like the plague. My question: what kind of metrics do you analyze to decide if an up-and-coming biotech is worth it, or you're looking into just another random trash penny stock? Manisha, I'll let you go first on this one, even though I could see Max is raring at the bit to go.
Sure. So if it's when you say biotech stocks, again, I like to say, you have your therapeutic stocks, you have your diagnostics and tools companies, and you look at different metrics depending on which bucket. I love looking at therapeutics companies the most. So for those, I generally look at what is their platform technology. I don't like investing in binary companies. So if I see that in their pipeline, their entire valuation is based on one drug they're developing, that's scary. And that's basically throwing your money into the trash. Yeah. Because most likely it will fail. So I like looking at deep pipelines, and I generally like to do research on, okay, well, what are likelihood of approval rates for the disease indication they're working after? How big is that market? So those are some metrics internally, and I try and keep this as up to date as possible. I model out what's the current cash burn for the company, for example. So if they're in a phase 1 trial, doing a discounted cash flow. And again, we don't like putting price targets on our recommendations, but it's nice to have a general idea of where we think the company will go. And especially in therapeutics, where you have no idea how science is going to work, it can completely fail, but you need to have and be sure that you have multiple drugs in the pipeline, and that there's, if one thing is off, it shouldn't destroy the rest of their pipeline. Otherwise, it's binary.
And we say this all the time when it comes to penny stocks or high value stocks, that the price isn't what you look at. And we often apply that to say a company that's, at a really high price. Is Tesla worth it? And the price isn't really the factor. That can be true with penny stocks. I'll give an example. Sirius XM, back before Howard Stern signed with them, when it was very heavily rumored. They haven't even they were just Sirius back then. They hadn't even merged with XM. They went as low as 5 cents, but I believed in the company. I looked at the subscription base. I looked at the revenue flow. I was pretty confident they were going to get Howard Stern, which would jumpstart them, 30 million. It was closer to 70 million people, I think, or some crazy amount like that. Maybe I'm overstating that, but it was a lot of people. And I believed that was going to happen. So the fact that they were trading at a low price, I didn't make a huge buy, but I saw it as an opportunity. So if you truly understand the fundamentals of a company, but with biotech, and we're going to talk about this later, be really careful, because I can start a company tomorrow that says I'm going to use bioengineered sodas to cure cancer and dementia. I can say that. It doesn't mean I'm going to deliver it. And a lot of these companies are little more than that. Max, I'm going to give you your word here, and then we're going to take a question from our very own CEO, SImon Erickson.
Simon's asking. He watches this show? What? So to Mabel's question, first I'd like to point out, penny stocks and development stage biopharmas are two different things most of the time, right? There could be a pre-revenue, pre-commercial company that, is valued at billions of dollars. So it's not always a penny stock. But as Manisha said, there's no revenue, there's no profits, no cash flows, right? So it's very difficult you have to use different metrics when you're looking and evaluating at these companies. So same thing that Manisha said, I would just add, what I like to look at, again, companies that have technology platforms that can be used broadly. And also I look at companies that are addressing pain points within some type of value chain, right? So does it have I don't want to name specific examples. I don't know. But, maybe there's something that goes wrong with like all of gene therapy, and one company or a couple companies are working on something that can potentially add more value to gene therapy or remove that problem, right? So that adds value broadly across all gene therapy pipelines. Like that's a good example of a platform technology that's addressing a pain point that might be worth, looking into a little bit further. Doesn't mean it's going to be a great investment. Doesn't mean it's going to work. But, it's a good start. That's something to look at, rather than companies that have one drug in their pipeline, or maybe they have 3 drugs in their pipeline, but they all work the same. Well, if one fails, then you probably know what that means for the other 2.
So our very own SImon Erickson asks, are there opportunities for biotech outside of healthcare? I know the answer here, but raise your hands. Who wants to go first?
I'll go first.
Max can go first. Are there opportunities for biotech outside of healthcare?
Yeah, so I wrote about this for my, we have this little thing called Perspectives here at 7 Investing. I think it's only for members, but we have a research portal now. We just launched it. So in the near future, we'll be able to write more freely. That's where I like to write more. I'm a much gooder writer than talker. So, biotech, we usually use that word incorrectly. We use it interchangeably to mean biopharma and healthcare, but that's incorrect, right? Biopharmaceuticals is just one part of biotech. There's also industrial biotech, which has nothing to do with healthcare. We can make materials. We can make chemicals. There's actually a company right now that's using genetically engineered yeast to make radar coatings for stealth fighters, right? That's biotech, but it's not healthcare, right? And then there's, agricultural biotech. We can engineer traits in plants, or the microbiomes, the plant microbiomes for the root systems. There's biotech animals coming our way soon. There's all kinds of different areas here fit under the biotech umbrella, including biopharmaceuticals. So if we lazily use that term to mean biopharma and healthcare, we're going to miss out on a lot of really cool, really interesting, and I think really big companies that are going to be public very soon. And this is kind of true of other terms that are technical terms, right? Manisha can weigh in here too. So we use biotech interchangeably with biopharma. That's incorrect. We also kind of use genomics. Today, genomics means everything, and it means nothing at the same time. It's kind of one of those terms that just gets slapped in front of something to mean everything. And it's pretty you can go down the wrong path with that. You can miss opportunities. So, beware of the commodification of certain technical terms, I guess, is my pitch here.
So Max, you say biotech animals. Does that mean I could get like a cat who follows directions, or a dog who doesn't bark at me menacingly when I take a walk? I'm not sure why dogs don't like me, but they don't. Is it more about like better food? Like, what's a biotech animal?
Yeah, so there's like we can genetically engineer salmon to grow different, like faster, or with different protein profiles. I think they're genetically engineering cattle so they don't have horns, because we have to shear them off. It's kind of painful for the animals. So that's just something for animal welfare. There's a couple different companies trying to clone pets, for instance. So if your little friend dies, we can bring them back in another version, I guess. I don't know if I tried.
I've seen that movie. It does not end well. Pet Cemetery does not. None of the versions of it have gone well. Manisha, I'll let you weigh in here, and then we're going to move on to a couple more questions.
Yeah, sure. Just agreeing with everything Max said there. And then in terms of biotech animals, I mean, right now, if you look at agriculture, there's so much waste and the anthropogenic use of land and pollution it's causing. So we are also using biotech to actually help the climate as well. So for example, there are companies out there. Max mentioned salmon. So yes, we call it farmed fishing, but imagine with increasing globalization, the demand for certain types of foods is much higher. But you can't just fish as much as you want, because then you'll, it's just gone. It's not just there for our taking, but if you can reduce the gestation period, for example, for fish by 50%, and you increase the number of calories that are produced in the world, you're able to also feed people at a lower cost with the same nutritional value. So, people who are vegetarians, for example, they need their protein. So how can we make different agricultural crops have a higher protein profile? So there are a number of things that they're doing with biotech. And then one of my favorites is DNA-based storage. So we always say technology is helping biology, but I think biology is now helping technology companies. I mean, it's still a theory and people are working towards it, but imagine if you're using living cells to store information and data. Right now, we're using so much compute power. Where are we going to store all of this information? So they're answering some of the other most salient issues, in my opinion.
I think Dan has a couple of spare hard drives in his closet after his move, right? You can just put it on there.
I have a lot of spare everything. The sheer amount of cables. I have like 400 USB cables. So moving teaches you a lot about your excess. You're watching 7 Investing now. We're taking your health and biotech questions. Let me give a bit of a programming note. We know the inauguration is at noon here in the East Coast. We're going to get you out of here by 1:15 at the latest. So guys, to do that, because I want to keep sticking with the questions we have, we're going to skip the other segment we planned. We'll push that to next Wednesday's show because it's one that's certainly valid a week after the election, after the inauguration, as much as it is. Guys, feel free to weigh in the private chat if there's any of the companies asked about that you want to talk about. Ken Chan says, a lot of education needs to happen for regular investors like us to invest in biotech. And that's what we're doing here. This is education. There is a ton on the 7 Investing site. When Max or Manisha make a pick, when any of us make a pick, we do a large write-up that gives you sort of all the fundamental reasons why we're making that pick. And then we also record a video call where we spend 15 minutes to 45 minutes sometimes explaining why we made that pick to our coworkers. So Maxx and Manisha have to go up against each other who, it's not adversarial, but they know to ask the questions that are the ones you're going to want asked, and they have that background. So I feel pretty comfortable that you can get a better base in this type of investing at 7 Investing than at any other investing service out there, and we appreciate you watching. But Ken C says, I'm curious to hear Maxx and Manisha's thoughts on BNGO and optical mapping. Can't say BNGO without thinking, was its name-o? Manisha, you get to go first.
Sure. So this popped up. Now it's not so small, but it's a speculative company, and I think it had some great marketing which you can see in its stock price. And full disclosure, I do own shares of this company, but when it was much cheaper. And I think there's some misconception that people think that this company, based on the technology, will be replacing sequencing. I've heard a lot of that, and that is definitely not the case. They are using sequencing actually with their technology to address a very specific vertical. And they basically came out and said, hey, and I'll let Max talk a bit more about this, but there's so in genomics, you have something called structural variants. So in sequencing, it's just one of the things that you look at in terms of which sequencing service is the best. And they realized that compared to another sequencing service, they did a better job of detecting that. That's it. So people took that, oh no, so this is that new company and they're going to be the new sequencer. And that's not the case. They operate in a different field. It's very new. I think what they offer is very intriguing. Some of their use cases and case stories show that they were able to, they helped aid in the diagnosis of some rare diseases for children. So I think there's a place for them for sure. It's just they're not taking a huge piece of that sequencing market that I think is being a little mispriced and misunderstood.
For those of you playing along at home, the call was B7. Max, your thoughts on BNGO?
Dan, I sing this every time in my head, every time I read it. Like, so, I mean, what Manisha said, I mean, it has intriguing technology, very useful potentially, but it's still a pretty small business, right? I mean, I don't know, it looks like it's falling a bit today. But, yesterday it was at like $2.1 billion valuation. It's going to have less than $10 million in revenue in 2020 total. So that's, it has the potential for growth. As a pretty interesting business model, or a way it wants to overcome some of the hurdles and obstacles in the lab hardware business models. But we still have to see it happen, So even if it's going to grow very quickly or 100% year over year, it's still only $20 million in annual revenue. So it is possible to overpay for growth, so valuation always does matter. And here I think maybe just a little frothy because it's risen so quickly. People see this vertical stock chart and they have FOMO and they want to get in, so ask yourself, do you want to buy this because you want to own it for 10 years? Or is it because you heard about it on Twitter 3 weeks ago and you think it's a really cool idea? So
do not
be honest.
Do not take ideas from social media. I mean, you could take them as research ideas. It's, hey, I'm going to go look and see if 7 Investing picked this, or if anybody that I'm a fan of is talking about this stock. But the people on Facebook and Twitter don't have your best interests. And Ken Chan, who just asked us that question about education, points out that I'm a subscriber. And as a subscriber, one of the things you get is access to us. That means if there's some aspect of biotech that you don't understand, I don't mean a specific stock because we can't give personal stock advice, but you don't understand how, say, like drug trials work, and you message us at info@7investing.com or @7investing, that's the number 7 on Twitter, and you say, hey, I'd like this. Well, maybe we'll answer you personally. Maybe Max or Manisha will decide to write something on it because it's something that's valuable. But again, there is no investing service where you can get this sort of level of personal attention, and we don't have everything yet. We're working on it, but with our new site, our ability to sort of answer en masse, and I can't tell you how much of our day we spend just responding to customer queries, and it's a joyous part of our job. Obviously, you get to interact with us, member or not, here on 7 Investing now, but that is one of the differentiators for those of you who are not subscribers. What are you waiting for? 7investing.com/subscribe, $17 a month or $170 a year. That saves you $34. Or if you go to any of our Twitters, there's a decent chance we've shared somebody's referral code where you can get $10 off your subscription.
And hey, let's stay with that one more, because again, like while we're on the question of educating people, so this doesn't get pointed out a lot, but the business model for a company that's selling lab hardware, right? They have to sell machines or get machines into labs, and then that's a one-time revenue stream, right? They buy the machine. The revenue, the bulk of revenue for these companies, whether it's Illumina or PacBio or BINGO, they sell the reagents, the kits, the chemicals. They're called consumables that are used to run those machines. So you have to get a large installed base, and then you have to get recurring revenue from consumable streams, right? You can also get service revenue, which is something that BioNano has. It's a pretty intriguing idea. Maybe that works. Looks like it was actually growing quite a bit, at least this year. I don't know if that was from the pandemic or whatnot. But so you have to get installed base, get consumables as recurring revenue, and it just takes time to build up the installed base, right? It took Illumina a lot of time, but now today, we think of Illumina as this company that makes DNA sequencers and these instruments, and it does. But I think 2/3 of its revenue actually comes from selling the consumables that run its machines, right? So this is something that affects, Illumina, PacBio, BioNano, 10x Genomics, right? All these companies have to use the same business model. So that's never really pointed out, but keep that in mind. It takes time to kind of reach this critical mass before
to explain that one on a more non-biotech level. Keurig doesn't make money selling you the coffee makers. They make money selling you the pods. Right. And that is important to know as someone who owns a Keurig DrinkWorks where the pods are $4 plus, who got suckered into buying premium pods this weekend, which it was okay. I'm not sure it was worth the $5 per drink. Going off topic a little bit here. So Backspace, we have two more questions here. We appreciate so many of you watching, so many of you being involved. We're going to try to pick up the pace a little bit because we're going to end the show one way or the other by quarter of. But Backspace says, do you think Eli Lilly's Alzheimer's success will drive pharma interest back into the Alzheimer's space? Max, you have 45 seconds.
Yeah, so Eli Lilly's been investing very heavily in neurodegeneration diseases, including Alzheimer's. So I wouldn't say that it might drive more interest. I think there was always interest. So this was similar to the Biogen asset. It's a monoclonal antibody. So same class of drugs as the Biogen. And, it's still earlier in development, pretty intriguing results. But there's still a lot of interest here among pharma. It's just earlier stage. I think there's ways we can maybe slow down the progression of neurodegenerative diseases. I don't think we can reverse them with drugs alone. So for Alzheimer's, for instance, the newest science says most of it's actually related to sleep quality. That naturally degrades as we age, but also people throughout your lifetime, if you don't get good quality sleep or enough sleep, oftentimes that is correlated to developing Alzheimer's or dementia. So without solving or addressing the sleep quality part of that puzzle, we're not going to be able to address it with drugs alone. So
I hope it's quality over quantity, says this person who does not take a lot of sleep. Manisha, 45 seconds on this topic here.
What was the question? I don't sleep very much, so I apologize.
Eli Lilly and Alzheimer's, I know.
No, so this is an area that I follow quite closely. My grandma had Alzheimer's, and it's just a difficult area to do research in. We've had so many failures. So I don't think there's a lack of interest. We know how large the opportunity is. One of the pieces that we put out for our subscribers, I wrote about Alzheimer's and kind of that giant market. We also have another company, Biogen. So coming up in March, it may be the next, and we don't know. The results will come out in March if it's going to be FDA approved. But even then, it's not a cure. Maybe it reduces the pace of deterioration. But I think there are a number of companies in earlier stages. I do not think we understand the pathology yet.
We're going to talk about one more question. I called this the danger/red flag perspective. And we appreciate the person who asked about this. And we always assume people are asking from an honest, I want to be a long-term investor play and not a, wow, is this going to go up 10 billion% because somebody mentioned it on social media? But I'm not going to say who it's from, just in case the person doesn't take it all that well. On Biotech, can you review ENZC, the possible cure to COVID, MS, and HIV? That is a gross overstatement. I don't care. I know nothing about this company, but there is zero possibility that is true. He's calling it the biggest opportunity in the market today. Sure, it would be if it could do all those things, which it absolutely cannot. I don't know if you guys have heard of Operation Warp Speed. Yes, we've heard of it. That is the sort of government glom-on attempt to what private business was already doing. It did put some money out there. I don't even see what this would have to do with that. Take a look at the stock NVAX4 comparison. Max, you were the one who highlighted this to me. This is like an 8-cent stock. Do not buy this stock, I will say, first up top.
Yeah. So again, anytime a company says it's going to cure, multiple sclerosis and HIV and, COVID-19. That's a pretty big statement. So I checked this out just for giggles or whatever. And, this was valued at like $13 million. It has one patent that it licensed from someone else. The CEO is a lawyer. Like probably not the company that's going to cure HIV and everything. So I don't know. Even if you don't have a technical background, I think maybe some red flags should have gone off if you look at this company. Its website has typos on it. I mean, there's you just try to be a little more pragmatic, I guess, when you're looking at this. But, biotech stocks, it looks great. They're 4 cents or whatever. You can buy 10,000 shares. Just don't do it. It never works. Usually getting pumped and dumped, right? It's going to go back to a penny sooner than you know. It's not what we do. It's not good for long-term investing.
Yeah, don't try to
work.
Don't try to ride the lightning of like what a company promises. And even when you look at sort of what it says on a credible site, go to any established pharmaceutical company. They will tell you what they're working on, what's in the pipeline. They won't tell you, oh my God, we're going to make everybody be able to fly and have laser vision. Beware of overpromising. Manisha, Samy, I'll give you the last word on this one.
Just all of the above. I understand that, especially when it comes to biotech, it can be confusing and it's easy to be gullible. I think what Max said, what Dan has already mentioned, looking at biotech companies, if they're promising the moon, you should be wary about it.
That is enough. We appreciate your questions. We took your questions today. We're going to do this more often. We there seems to be a heavy interest in talking about what you want to talk about when it comes to biotech, more so than other spaces. But guys, let's hit our finisher. And this one is more in my space than yours. And Sam Bailey, if you want to share the graphic, which company will struggle the most post-pandemic? 32.6% said Peloton, 10.5% said Kroger, 37.6% said Grubhub, 19.4% said Zoom. I'm going to weigh in here, and Maxx, Manisha, feel free to jump in if you want. The answer is Kroger. I think there is zero possibility that Kroger, which right now is doing very well because you have to get groceries, that they're fighting with Amazon and Walmart, two companies that have great reputations that don't need to make money on grocery. Pre-pandemic, Kroger was not doing well. Peloton, Zoom, Grubhub, they all might see some dips in business, but especially Peloton and Zoom, those are very solid businesses. And Zoom doesn't really make less money if instead of us having 10 Zoom meetings a week, we have 7. Like it still makes its money. Maxx, Manisha, I know you haven't heard of all these companies, but is there anything you want to weigh in on this one?
Yeah, I don't know much. I would say I could see Grubhub falling. I mean, I think there's going to be this pent-up demand for people going to restaurants and things. I know I am. Once it's safe to do so, of course. Peloton was second. I don't think that's true. They might sell more or less, machines, but a lot of the revenues from like software services and things like that, right? The subscription services. So that might not be affected too much. Hopefully they can solve some of their delivery issues. Manisha, I don't know if you have anything.
Yeah, I did it through process of elimination. Which company have I not really heard of, or it took me an extra second to think of? So that was Kroger for me because I have friends who use Peloton and they're in love with it. I don't think you can part with them from their Peloton bikes. And I'm an avid Grubhub user, so I would say Kroger. But for a second, I was like, wait, I think they're a company. Groceries. So I'm just based on that.
And I will say, so Kroger is an undifferentiated grocery chain. And I will say that they've been making money during the pandemic. And aside from what they've had to spend dealing with the pandemic, they have invested in things that could work. So this was a company I was very negative on, that I'm still negative on, but I am bullish on management sort of giving it a fighting chance. And it has yet to be seen what percentage of people with groceries are just going to prefer going to a grocery store over, getting their groceries at Walmart or from Amazon. With the grocery delivery market, I still think it's going to be a pretty small amount. You have to be home or you have to have something bulky like a refrigerator on your porch. Like it's not a perfect system. With that, we promised we'd get you to the inauguration, and we are going to do that. We are T-minus 14 minutes on having a new president, and hopefully everything is going safe at the Capitol. If it isn't, none of you are watching, but we assume because there's still an audience here that nothing huge has happened elsewhere. So we're done. If you want to get in touch with us, and we are easy to get in touch with, that is info@7investing.com. Kevin K. Mark, who we answered a question before, says, yeah, I've gotten responses very quickly when I've had questions. Yeah, we answer. Steve Symington is usually checking the email, and he farms it out to any of us, or he answers the question. Sometimes it's groupthink. Hey, someone wants to know this. What can we say? Sometimes it's, hey, tell the person we'll make it a segment on the next show, or we'll cover it in a podcast. But you can get to us. You can also reach us at 7investing. That's the number 7, investing on Twitter. I want everyone to get to the inauguration. So that is all for the Wednesday edition. We will see you again Friday. Thank you for watching.